All right, let's dive in. Today, we're looking at some interesting stuff from the General Insurance Corporation of India.
Yeah, their financials, the report from their board meeting, and even the auditor's notes.
So for anyone listening who wants to get a sense of how a major reinsurance company operates, well, this is it.
It is a fascinating look, yeah. Not just the numbers themselves, but like how this kind of company manages risk in a world that's, you know, so uncertain.
Yeah, for sure. Now, I know reinsurance can be kind of a complicated topic.
Sure.
So just a real quick reminder, the General Insurance Corporation of India, or GIC Re, they're essentially the insurer for other insurance companies,
Right.
helping to spread the risk around. And they're a big deal,
Yeah.
government-owned, listed on both the Bombay Stock Exchange and the National Stock Exchange.
Yeah. Yep. And you know those specific codes if anyone's interested? On the Bombay Stock Exchange, it's 540755.
Got it.
And on the National Stock Exchange, the code is GICRE.
Perfect. Now, their board just had a meeting, November 12th, 2024, and they approved all these unaudited financial results for the quarter, ending September 30th.
For both the quarter and the half year.
Okay, so before we really get into the numbers, just a reminder that unaudited means it's kind of a snapshot in time.
Right, like checking your bank balance before your paycheck clears.
Exactly.
It gives you a general idea, but things might change a bit.
Yeah, okay. And just to be extra transparent, they also had to put together a separate report on, what's it called, related party transactions.
Just standard procedure. Got to make sure everything is above board.
Got it. Okay, so let's get to the exciting part. How did GIC Re actually do? Well, their gross written premium for the quarter was, get this, 841,349 lakhs.
Wow.
Now, I know that's a lot of lakhs, but basically it's the total premium they underwrote, before you take into account any reinsurance.
Yeah, so their net premium written, which is after they've passed some of that risk onto other reinsurers, is a bit lower. Comes in at 760,376 lakhs for the quarter. It's pretty common practice in the industry, kind of like sharing the burden.
So like teamwork.
Exactly.
Got it. Now, there's this other figure called premium earned, which for the quarter is 884,704 lakhs. And that's the portion they've actually earned, from providing coverage during that time. And for the entire half year, that number jumps up to a massive 18,091,060 lakhs.
Big numbers, for sure.
Yep.
But you got to remember, premiums are only one part of the story. What about their investments? Those can be a huge source of income for any insurance company.
Oh, right, of course. So in this quarter, GIC Re earned 244,163 lakhs from their investment.
There it is.
Add in other income, and their total income comes out to 11,017,991 lakhs.
They're definitely operating on a massive scale, that's for sure.
Yeah, but of course we need to look at both sides, right?
Absolutely. Income and expenses. Got to see the whole picture.
All right, so let's flip that coin. One major expense for any insurance company is claims. And this quarter, GIC Re paid out 341,801 lakhs.
And remember, that's just the claims they've actually paid out.
Oh, right.
You also have to consider the change in outstanding claims. That includes, there's incurred but not reported claims. Those are IBNR.
Okay.
And then there are the incurred but not enough reported claims, or IBNR. These are claims where the insurer thinks they'll probably end up paying out more.
Right. So it's not as simple as just the claims you see right now.
Yeah.
It's about predicting what's coming down the road.
Exactly.
And in this quarter, that change in outstanding claims added another 11,008,843 lakhs to GIC Re's expenses.
Wow.
And, something interesting, in the auditor's report, they actually highlighted this whole area, the reconciliation of balances with other insurance businesses, as an emphasis of matter.
Right, which basically means there could be more to the story here, like we don't have all the pieces of the puzzle yet.
Okay, so we've got some mystery going on. Now, when you add in their other expenses, things like commissions, employee costs, operating expenses, their total expenses for the quarter come to 12,032,490 lakhs. And if we do a little math there, that means their underwriting result, which is the income from premiums minus those underwriting expenses, comes out to a loss of 1,014,499 lakhs. So a pretty big loss in their core business, right? Does that mean GIC Re is in trouble?
Hold on. We still need to factor in their investment income, remember? Plus, with reinsurance, you're looking at long cycles. One quarter isn't the whole story.
Okay, yeah, it's a marathon, not a sprint.
Exactly.
Okay, and there's another thing the auditor pointed out. GIC Re didn't create a catastrophe reserve this year.
Yeah, that's interesting. Usually insurance companies put aside some of their profits, to cover potential catastrophes, big natural disasters, things like that.
Makes sense. It's like a safety net.
Right. But GIC Re said they're not creating one just yet because of market uncertainties.
So I wonder, what are those uncertainties?
Yeah.
And how are they impacting GIC Re's, overall decisions?
Yeah, good questions.
It feels like they're being extra cautious.
It does seem that way.
All right, well, back to their overall profit or loss, I guess. When you factor in their investment income, other income, and all those expenses, GIC Re's profit before tax for the quarter comes in at 228,113 lakhs.
Okay.
And after taxes, their profit is 186,076 lakhs. So they're still making a profit even with that underwriting loss.
Right, which really shows you how important those investment returns are for a company like GIC Re.
Yeah, absolutely. And their half-year profit after tax is even more impressive, 298,667 lakhs.
Big numbers. But, there's one more thing the auditor pointed out.
Okay, what's that?
Well, they mentioned that a lot of GIC Re's cash and cash equivalents, they're actually tied up in fixed deposits, maturities over 3 months, things like that.
Yeah.
And also deposits for letters of credit.
So it's not all readily available cash, right?
Right. So you have to think about their liquidity. How easy is it for them to access those funds if they need to?
Gotcha. Adds another layer to their financial position, right?
Definitely. It's not just about how much profit they're making, but also how that money's being managed and what risks they're facing.
Yeah, it's a lot to consider. Okay, so we've seen that GIC Re's financial picture is pretty complex. But are you ready to dig a little deeper? See how their different business segments are actually performing?
Oh, absolutely. That's where things get really interesting, seeing which areas are doing well, which might need a little extra attention.
Yeah. And GIC Re, they've got a lot of different segments: fire, motor, aviation, engineering, health, agriculture, marine, and more.
It's a diverse portfolio.
Yeah. And each segment has its own unique risks and challenges.
Of course, of course. So what's catching your eye in segment data?
Well, the marine cargo segment, that one really jumped out at me.
No, yeah.
That's showing some big losses. A 44,220 lakh hit for the half year.
Yeah, marine cargo has been a tough area lately with all the global trade issues. Lots of uncertainty.
Yeah, for sure. But, to really understand what's going on there, we should compare it to their other segments, right?
Absolutely. How do those numbers stack up?
Well, segments like fire and motor, they seem to be doing okay. Fire has an operating profit of 59,240 lakhs, and motor comes in at 76,946 lakhs. Both for the half year, of course.
Interesting. So it's not like a universal downturn across the board.
Right. And one positive sign is the agriculture segment.
Oh, tell me more.
They're showing a profit of 37,583 lakhs for the half year, which makes me wonder if that's a reflection of how strong agriculture is in India overall.
Could be. Now, remember those technical liabilities we talked about earlier, the IBNR and IBNR?
Yeah.
Well, those play a role in each segment's performance too. So, for example, fire has a huge amount in outstanding claims reserves. 30,024,943 lakhs.
Wow.
It just shows how long-term insurance can be, especially in areas like liability or engineering. Claims can pop up years after the policy's been issued.
Yeah, that's true. It makes you think about all the challenges GIC Re might face just managing all those potential future liabilities.
For sure. Accurately predicting and managing those long-tail claims. Crucial for any insurer's, financial stability.
Yeah, that makes sense. Okay, so we've looked at premiums, income, expenses, and even peeked into their different segments. But then it's time for the part I sometimes get a little lost in.
The analytical ratios.
Yeah.
Don't worry, I'm happy to walk us through it. These ratios are really important. They give us these standardized ways to check GIC Re's financial health and efficiency. Think of it like their annual checkup.
Okay.
All right, so which ratios should we focus on? Well, there are 4 key ones: solvency ratio, expenses of management ratio, incurred claim ratio, and combined ratio. Each one tells us something a little different about how GIC Re is doing.
Okay, let's break them down one by one then.
Sounds good.
First up, solvency ratio. This basically tells us, if I understand it right, how well GIC Re is prepared to meet their long-term obligations.
Exactly. It's a measure of their financial strength. And the magic number here is 1.5. Insurers need to maintain a solvency ratio of at least 1.5 to be considered, financially sound.
Right. By the regulator.
Exactly. It's like a safety net. Make sure they have enough to cover potential losses.
So where does GIC Re stand?
Well, their solvency ratio right now is 3.42.
More than double the requirement.
Yeah.
So they're in a good spot.
Right. On the surface, yeah. But remember, we got to look at the big picture. Their solvency ratio at the end of the last fiscal year was 3.25.
Oh,
So it's actually dropped a bit. Might not be a huge red flag, but it's something analysts are definitely watching. Is this temporary or something else going on?
okay. So a little bit of a mystery there.
For sure.
All right. Next up, expenses of management ratio. This is
Mhm.
all about efficiency, right?
Yeah.
How much are they spending to manage everything for every rupee of premium they earn?
Exactly. The lower the ratio, the better they're doing at controlling costs and operating efficiently.
Makes sense. So what's GIC Re's ratio?
For the half year, it's 0.78. A little better than last year's 0.95.
Oh, so it seems like they're doing okay at keeping their expenses in check.
Yeah, looks like it.
All right, now for the incurred claim ratio. This tells us how much of their earned premium is being paid out in claims.
Right. A high ratio could mean a couple of things. Maybe challenges in their underwriting process, or maybe more claims because of external factors, like natural disasters or a bad economy.
Okay, yeah. So for GIC Re, their incurred claim ratio for the half year is 91.58.
That's pretty high, isn't it? They're paying out a big chunk of their premium in claims, but last year's ratio was actually even higher, 96.83.
Oh, so their claims experience has improved.
Looks like it. But to really understand that shift, we'd need to dig deeper into the types of claims they're handling.
Right, of course. All right, last but not least, the combined ratio. This one kind of ties everything together, right?
It does. The combined ratio adds together the expenses of management ratio and the incurred claim ratio. Gives us a, big picture view of their underwriting profitability.
Got it. So what are we looking for here?
A combined ratio below 100% means they're making money from their core insurance business.
Okay,
Anything above 100% means they're losing money.
got it. And for GIC Re?
For the half year, it's 111.64.
Okay, so that concerns what we saw earlier, an underwriting loss. But last year, it was 116.98.
Right. So it has improved.
So even though they're facing some challenges, they're taking steps to improve, right?
It seems that way. It suggests they're focusing on managing risk and keeping expenses under control, which is really important for long-term success in this industry.
Yeah, absolutely. Okay, we've covered a lot of ground here. Overall performance, different segments, and these important analytical ratios. But before we wrap up, there's one last piece to look at. Investor information.
Ah, yes. Earnings per share, public shareholding, that kind of thing.
Right, so for our listeners who follow the stock market, GICRE's basic and diluted EPS before extraordinary items is 16.51 for the half year.
Something potential investors will definitely be comparing to previous periods and to the rest of the industry. Helps them see how GIC Re stacks up against its competitors.
Right, and in terms of public shareholding, that currently stands at 17.60%.
Okay.
With the government holding the rest, 82.40%. So the government still has a pretty big influence on GIC Re.
Oh, for sure. That's definitely something to keep in mind. It adds another layer to the analysis. You got to consider the government's role and their objectives when you're evaluating GIC Re's strategy.
Yeah, makes sense. Okay, so we've done a pretty deep dive into GIC Re's financials. We've seen their strengths, some potential weaknesses, and a few areas where we need more information. But this is just the beginning, right?
It is. There's always more to learn, which is what makes these deep dives so interesting.
Absolutely. What are some of the most significant insights that stand out to you from this first part of our deep dive?
Well, I think the thing that really stands out to me is that tension. Between GIC Re's strong overall profit, which, let's be honest, is driven a lot by their investment income and those concerns about their underwriting losses, especially in that marine cargo segment.
Yeah, that definitely caught my eye too. It's like they're doing great in one area, but then struggling in another. Makes you wonder, how long can they keep that balance going?
Exactly. And then you've got that drop in their solvency ratio. I mean, yeah, it's still way above what the regulator requires, but still.
It makes you think, right?
Mm.
Could this be a sign of, I don't know, some vulnerabilities in their portfolio? Or are there other things we haven't even considered yet?
It's like a puzzle, and we're still missing some pieces. And speaking of puzzles, the auditor had those comments about, ongoing reconciliations and that whole thing with the catastrophe reserve.
Yeah, let's talk about that a little more.
Huh.
The auditor mentioned that GIC Re is still working on reconciling balances with other insurance businesses. So what does that even mean? And why is it important?
Well, it basically means they're still trying to match up their financial records with the records of other companies they do business with. It's normal, part of accounting. But the auditor highlighting it suggests there might be some hiccups, some delays in the process.
So it's like they're still figuring out some parts of their financial picture.
And that could change things, right?
Exactly. It adds some uncertainty, and then there's that decision to not create a catastrophe reserve this year.
Yeah, GIC Re said it was because of market uncertainty, but wouldn't that make them more vulnerable, if a major disaster actually happened?
It's definitely a risk. I mean, usually setting aside money for a catastrophe reserve is a pretty standard move for reinsurance companies.
Yeah.
It's a way to cover those really big unexpected losses, hurricanes, earthquakes, things like that.
It's like an emergency fund for those just-in-case scenarios, right?
Hmm.
So not creating one suggests, I don't know, maybe a higher risk tolerance? Or do they just think those big disasters aren't going to happen?
It's a gamble, that's for sure. Yeah. The auditor also pointed out that GIC Re is using fixed deposits for letters of credit, and that those are part of their cash and cash equivalents.
Mm-hmm.
Does that affect how quickly they could respond in a crisis? I mean, if they need cash fast.
That's a good point. Fixed deposits, they lock up your money for a while. Yeah, you get interest, it's stable, but it's not like having cash on hand.
Right. So it's like choosing between stability and flexibility.
Exactly. It's a balancing act, especially for reinsurers.
Yeah, for sure. Okay, so we've seen some potential weaknesses, but we should remember GIC Re is still a major player in the reinsurance world. They've got a long history, a solid financial base.
Absolutely. We're not trying to be all doom and gloom here. It's more about, understanding the complexities.
Right, getting the full picture. And I think this deep dive has done a great job of that, going beyond the surface, really digging into what's driving GIC Re's performance.
Yeah, agreed. It just emphasizes how important it is to, look beyond those headlines. That's where the real story is.
For sure. So where do we go from here? What are some things we should keep an eye on as GIC Re moves forward?
Well, I'm really curious to see how they handle those underwriting challenges, especially in that marine cargo segment. Will they change their approach to risk, diversify their portfolio, maybe even, explore something totally new?
Yeah. And I'm wondering how the global economy, all that uncertainty, will impact their investment strategy
Yeah.
and ultimately, their profits.
Those are the big questions.
Right.
And I think we'll start to see the answers play out in the next few months, maybe years. It'll be interesting to watch.
Yeah, how GIC Re adapts to this changing market. It's fascinating stuff. And for anyone listening who wants to dig deeper themselves, there's so much information out there. Analyst reports, industry publications, regulatory filings.
Yeah, don't be afraid to dive in. This world, reinsurance, it's complex, but it's also super interesting. There's always more to learn.
Absolutely. And that's what makes it so exciting. Thanks for joining us on this deep dive into GIC Re. We'll see you next time for another one.
Looking forward to it.
It's amazing going through all this information about GIC Re.
Yeah.
It really makes you realize how much there is to learn about this industry.
Yeah, and every time you dig into a company like this, it just opens up more questions, more things to explore.
Totally. So thinking big picture for a second.
Yeah.
What does all this GIC Re's performance, the auditor's notes, what does it tell us about the reinsurance industry as a whole, not just in India, but globally?
I think it really highlights the challenges that reinsurers are up against everywhere. Uncertain economies, geopolitical risks, climate change. It all affects their bottom line. And these aren't problems that are going to disappear anytime soon.
Yeah, it's like the reinsurance industry is this reflection of what's happening in the world, all the complexity, how everything's connected.
Exactly. And for a company like GIC Re, navigating all that, it requires this delicate balance, managing risk, making sure they're profitable, and adapting to, constant change.
Makes you wonder, how will GIC Re's strategy change as all this keeps unfolding? I mean, will they focus more on certain segments, pull back from others, maybe even try something totally new?
Those are the million-dollar questions. And I guess we'll have to wait and see how they respond in the coming months, the coming years. It's going to be fascinating to watch how they adapt.
Yeah, how they shape their future in this constantly changing market. It's funny, we're kind of leaving with more questions than answers, but that's a good thing, right?
Absolutely.
This deep dive has really made me want to learn more.
That's what it's all about. It's not about finding all the answers. It's about, giving you the tools to ask the right questions, to keep exploring.
Exactly. So for everyone listening, remember, this was just the starting point. There's so much more out there. Analyst reports, industry publications, all those regulatory filings.
Go check them out. Reinsurance is a fascinating world, and there's always something new to discover.
Absolutely. And that's what makes it so exciting. Thanks for joining us on this deep dive into GIC Re, and we'll see you next time for another one.
See you then.